This is the Moneycontrol budget manifesto for Union Budget 2023. From a banking sector perspective, this budget is very much likely to be a non-event for two key reasons. Two major announcements the industry and the stakeholders were expecting from budget was, one is on the PSB privatisation, and the second one is on what FM Sitharaman will provide in terms of capitalisation for PSBs. On privatization, the discussion itself is off the table at this point because the bill that is required for government to effect privatization, Banking Laws Amendments Bill, is not listed for winter session at this point. In FY22 budget, the FM had announced that the government wants to privatize two public sector banks and a state insurance company, but there was no real follow-up for that announcement. The Niti Aayog has identified two banks, IOB and Central Bank of India, for privatization, but these names are very much under discussion even at this point, and our information is that government has not finalized any names for privatization even now. There is also a political angle to it. The government probably doesn't want to invite the displeasure of trade unions and local factions of bank employees before the general elections in 2024. As we know, the privatization of PSBs are a lot more politically sensitive than the government stake sale in other public sector enterprises. So that being the case, it is the FM is likely to pass the privatization agenda this time. We do not expect any major announcement. The second big announcement, which is generally expected from the union budget, is on the capitalization for PSBs. Every year, the government allocates a certain amount for PSBs to meet the regulatory requirement capital as well as to push further credit growth. But this year, our sense is that government will not announce any capitalization plan for PSBs for two major reasons. One, the bad loan situation in India's PSBs, public sector banks, has significantly improved. The second part is that the profitability and overall health of banks have improved. Just to recall the past capitalization plans, between FY16 and FY21, the government has infused about 3.3 trillion rupees, 3.3 lakh crore rupees in PSBs, which has clearly helped these banks to improve their bad loan management as well as their capital adequacy to comply with the Reserve Bank of India's norms. Just to put some numbers, the CAR, capital adequacy ratio of PSBs, have improved to 14.6% as on March 2022, compared with 10.87%, which is mandated by the RBI rules. Similarly, the NPS, the non-performing asset ratios, have declined from 7.6% to 6.7%, which is actually a 6-year low. So this year, if one takes a closer look at the health of PSBs, overall performance have improved, which might be cited by the government as a reason not to infuse fresh capital. Probably the government will ask the banks to raise capital from markets based on their needs and will refrain from infusing further capital. What is likely to happen is the government might spell out some directions to PSBs to push financial inclusion, the process of taking banking services to the far-flung areas of the country, to the underbanked and unbanked population. We do expect some announcement in connection with the financial inclusion push, as well as improving efforts to improve the performance of PSBs in terms of overall business growth and bad loan management. This is what generally we expect from budget this time, and we'll keep updating you about further developments. Thank you.